How are qualified charitable deductions or distributions reported, commonly referred to as QCDs?
All right, so qualified charitable deduction, a QCD. These are
Distributions.
distributions. Sorry, these are really popular within the clientele right now. Prior to the 2017 tax law change, they weren't used as often.
Hmm.
I don't remember when they became an option, but what they did in 2017 is they raised the standard deduction so high that a lot of people aren't able to
Itemize their
itemize.
charitable
Yeah,
deductions.
if you can't itemize, then you can't write off your charitable deduction, and you don't need to because your standard is already higher.
Yeah.
But you can still take your standard and still get a reduction of income if you use this qualified charitable distribution. Couple of caveats. First of all, you can only do it if you are getting a required minimum distribution.
No,
Oh,
you don't have
oh,
to.
that's right.
So as long
That's
it
right.
has to come from an IRA,
Right.
whether it's a SEP IRA or a traditional IRA or simple IRA, and you have to be over 70 and a half to do it,
Yep.
which was the old RMD
That's
age.
right.
So
That's
that's
right.
why it was
Yep.
always associated with RMD age.
Yep.
And you're able to exceed your RMD up to $100,000 is the max though. So if your RMD is above that, you can't go above that.
Yeah. Yeah. If you're not taking an RMD, you're giving money away out of your IRA account. You're not getting a write-off for that because you
Hmm.
don't have. You're just not having to count that income,
Yeah.
and so it does. It's a way to distribute some money out of your retirement IRA retirement plan without having to pay taxes on it and pay your charitable deductions that way. That's not a bad way to do it, especially if you can't itemize.
Hmm.
If you are at the age where you're getting a required minimum distribution, that's going to end up on your tax return,
Yep.
right? So you can give that away, part of that away,
Hmm.
anything as far as that goes. So we have some examples here of some, what some of these tax forms look like, so you get an idea. It's a little hard to see this. Um,
But
Go ahead.
no matter what, unfortunately, all your custodians and all your brokers are going to give you a 1099-R, and they're not going to qualify QCDs separate from your gross distributions. So they're always going to be treated as gross distributions coded as 7. And so that's why you see on this, even though this person took QCDs, it's coded as 50,000 gross and 50,000 as their taxable amount. They're not going to make they're not going to tell you what's been like taken out or not. They're only going to tell you what was taken out for Fed and what was taken out for state. That's about it.
Yeah, exactly. So they don't always know for sure, especially if you're writing checks out of your IRA, what you're writing those checks for. They leave that up to you to, tell your accountant.
Yeah, and they also like you could be writing a check to a friend, or you could be writing a check to. It has to be a qualified charity
Yep.
in the IRS's I, which is a
50C, 503C.
503C
Yep. Might be, yeah.
or is it 501C?
I
It's
think it's
one.
a three.
Yeah.
Nonetheless, but just box one, 50,000, right? There was
Yep.
some federal income tax withheld, box number four, 5,000,
Yep.
which you can elect to have withholdings.
Yep.
If, you wouldn't have withholding on your QCD, but let's just say for the other money that you
Yep.
didn't give away. Box seven, there's a seven in there. And that just means that it's a taxable distribution,
Yep.
essentially. And even though you might have given away part of that 50,000, they're still saying it's all taxable.
Yep.
We'll show you how to deal with that. There's a little checkbox right next to that seven there. It just means it's an IRA, SEP, simple IRA. You can't take this out of a 401k.
Yeah.
So this is one of the advantages of an IRA over 401k in this case. So what would happen is that, okay, now here we are, a section of the little 1040 form.
Yep.
You can see IRA distributions on 4A there was 50,000.
Yep.
That's exactly what that form just showed us. And then what 4B
Is basically what you actually were as a taxable income amount.
right. And so you want to put QCD in there,
Yeah.
just like it's there. Write it in, type it in, whatever. And there's 25,000 taxable. So what that means is that this person gave away the other 25,000
Yep.
through qualified charitable distribution.
So let's say you gave away 40,000, and that for B box you would
Right.
put 10,000.
That's right, exactly. And so, and this is a little bit confusing, but it's not hard in the end.
Yep.
You're going to have your requirement of distribution. That number is set. It's not something you can control. You decide how much you want to give away, and you give it away, and it takes that money right off of your tax return
Yep.
as taxable income. So even if you have the standard, deduction, the high standard deduction, and you can't itemize, you can still reduce your income in this case
Yep.
with your charitable contributions that you might be doing anyway, right? And so this is definitely the smart way to do these charitable contributions. But just like the normal, if you were going to itemize, you'd have to tell your accountant, here's all the charitable
Yep.
contributions I made. This is no different. You're just telling your accountant, here's all the charitable contributions I made, but I took them out of my IRA through QCD. It's the same thing. You would have to report it one way or another, so it doesn't change anything. It just means that if you're itemizing and you can't write off the charity, and you're getting forced income from your IRA, you can get rid of some of it this way. So it's actually really popular, again, within the clients. Seems to be two ways you can do it. You can fill out some forms and have the custodian do it directly, or you can get a checkbook on that IRA and then write out the checks. Just got to make sure that there's money in the money market for the checks to clear.
Yeah. If your IRA is invested, you should work with whoever is your custodian to make sure there's enough cash to cash those checks. Otherwise, it'll be bounced.
Yeah, exactly. So that's good info, really. I think that is worthwhile information, that it helps to define this, and more people are starting to discover how this works. And again, it's not that complicated. Once you get to know it, it's a little complicated up front, but it's a little bit of effort, and these type of videos and watching this, and you'll catch up real fast.